Office vacancies are also at a 5-year high, again because of joblessness. And my next guest, Steve Sakwa, says that could mean more trouble ahead for commercial property loans. Last year, Institutional Investor ranked Steve the #1 REIT analyst, and he is now a senior managing director at International Strategy and Investment Group. And Steve, thanks so much for joining us and being in here in the studio.
Thanks for having me.
And we've been talking quite a bit on this program about the pain ahead in commercial property, perhaps the best telegraphed crisis to come. But it's been going on for 2 years, though.
It has. I mean, if you think about when pricing peaked, it really started back in February of 2007, and we've sort of been on this steady decline as fundamentals have been eroding and the debt markets have seized up. Clearly, things sort of accelerated back after the Lehman bankruptcy and the financial crisis that started in September of 08.
And in fact, things are worse in terms of commercial property this time around than they were in the last, I guess you could call it, crisis after 9/11, right?
Well, I think from a financing standpoint, things are certainly far worse. From a fundamental standpoint, things are certainly getting worse. But really, the debt markets have been probably the biggest challenge that the companies, both public and private, are facing today.
Now, is this going to be worse than what we've seen in the residential market? Because that's already kind of almost played out.
Well, I think from a pricing standpoint, and depending that right now there's very few transactions that are taking place in commercial real estate, really across all property types. So to try and gauge how much property prices are down is a little bit hard. But I would say that, you know, prices are down 30, 40, maybe even 50%. But we're not seeing a lot of trades taking place, again, because the lack of debt availability for new transactions.
So what does that mean then? When are we going to hit bottom? When are we going to hit that recovery point then?
Well, I think from a fundamental standpoint, we're looking for things to start to bottom out probably over the next 3 to 4 quarters. In some of our models, we think that the worst from a year-over-year decline from
but if there's very little transactions going on, though, then how's that going to happen?
Well, things are starting to play out. So we're starting to see some debt coming back. We're starting to see the public companies. They've raised 15 to 16 billion of equity. They're starting to be able to get debt at very attractive prices in the unsecured bond market. So I think one of the things that investors are looking for, particularly on the public side, is when these better capitalized companies like Simon, Boston Properties, and a few others will have an opportunity to take advantage of the distress on the private side.
Right, start making some acquisitions then.
Correct.
And Steve, we had that story yesterday about Starwood buying up the assets, the commercial loan assets of Chorus.
Right.
And coming in, actually, apparently there was some pretty healthy bidding going on, and they came in a little bit higher than what the market expected. So what does that tell you?
Well, we're actually seeing again, for the few transactions that are out there, particularly on a couple multifamily deals that we're aware of, there's been about 30 to 40 bidders showing up for these individual assets. Now, these are assets that might be $75 to $100 million in size, but there's both domestic capital as well as foreign capital looking at that transaction size. If you're talking about portfolios, you know, that are north of $1 billion or $5 billion, I think, you know, it gets a little bit thin in terms of the number of bidders. But so far, for things that are coming to market, there's been pretty healthy demand both on the multifamily side as well as the office side.
Okay, so we'll be watching that. All right, Steve, thank you so much for joining us on Commercial Property.
Thank you.
Steve Sakwa of Institutional Strategy and Investment Group.